Hello, welcome again to FairtaX Power Radio. I'm Bob Paxton,
And I'm Bob Scarborough.
and we are the FairtaX Guys.
That's right.
There you go. You can get a scrolling banner at the fairtaxstore.org. You cannot get Fat Albert at the FairtaX store, but
That's a really good conversation starter, because if you've never seen Bob Paxton do one of these, and I've never seen him do the large one, but he stands around and does that like people wind their watch. He just boop, 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 and all of a sudden it's
yeah, I'm going to have to talk to the people who run the FairtaX store and see if I can't get them to get a cube that when you saw that it says FairtaX across the.
Wouldn't that be great? That would
That,
be.
that,
I'd love it. I'd buy one, even though I could never. I could say, please let me take a picture of it before I twist it around.
Before if somebody gets a hold of it and scrambles it all, then you'd have to mail it down here to Florida, and I'd have to put it back together for you.
I'd mail it down with a case of cheer wine. Yeah.
Yes, I can be bribed with cheer wine. Not a problem at all. And again, for those who don't know what cheer wine is, it is a cherry flavored soft drink. It's not wine. There's no alcohol in it. But I grew up on it there in North Carolina, and you can still get it. And there are places down here in Florida where I can get it, but it's not as widely available here as it is up there where they make it.
Well, it is definitely springtime, and here we are in the waning weeks of April, and the weather's been nice in North Carolina over the last few weeks. You get rain, you get the thunderstorms, and you get the cold, a little bit of cold sometimes. But towards the end of April, it really starts to kick in that hey, we're in a change of the season. Season's changed, and the only thing that stays the same is the income tax.
Hopefully, people have recovered from the tax deadline, which was about a week ago. In fact, exactly a week ago. And so that now they get to look forward to another whole year of collecting stuff and holding receipts and sorting them out into what's tax deductible and what's not, keeping records and all that garbage that you don't have to do if you got the fair tax.
That's right. Another spring day, folks. And this too, before you go into c.d.gov,
okay.
The psychological aspect of this, did anybody feel a relief sort of about Wednesday or Thursday of last week, like the 19th or the 20th? Did you sort of went,
yeah.
There's this burden, this psychological burden that gets lifted off of you when you get in. What a heck of a cycle that is. You collect all these papers, you got your receipts, and you got your W-2s, your W-9s, your 1099s, your 1099 NEC, your 1099 this. You've collected all of the information that they needed in case you stole your neighbor's lawnmower. All that stuff is in, and you'll have to listen to a few episodes ago to figure out what I'm talking about. There's this burden that's lifted off of your psyche so that you actually breathe better. And imagine that not having business owners, imagine not having to go through that on an annual basis, and in some cases every 3 months you have to take a look at it.
Imagine not having to pay people hundreds, if not thousands of dollars to go through that shoebox for you rather than you doing it yourself.
Yeah, I mean, but it changes just like that with the fair tax, a tax on consumption, not on top of the income tax, eliminates the income tax. Gone. IRS gone, out the door, never to be heard from again, and you get to spend money on things, and you pay taxes then, and you only pay tax if you buy something.
Yes, tax returns gone. That's good. Withholding gone. Payroll taxes gone. I mean, there is so much that the fair tax replaces. That I'm going to have to go back to that little slide we did from our presentation in Las Vegas, where I had it. I had this set. It was all animated, where this thing goes away, it goes away, and that goes away, and that goes away, and that goes away.
Well, I mean, it's true, and people don't. If you can sit back for a moment and visualize it, and especially, and I'll talk to the folks that are out there that are small business owners, a one-man operation or and son type situation. You may have 5 employees or something like that. Imagine who you're paying. If you're not doing it yourself, imagine who you're paying and how much it costs you to do that, and the time you have to spend with that person, or the time you have to spend yourself collecting, managing, filing, calculating, looking at all that to get through the year and what you could do with that time if you didn't have to do that. In other words, how would you change your business? How could you advance your business? How could you innovate and create and do great things in your community if you had the time available to you that is now spent dealing with the income tax? I mean, it's something to sit and consider, and especially now while we're breathing that sigh of relief of having finished the tax cycle for another year. But guess what? The next day it starts again. You have
all over again. It does. So
yeah, it's insane. It's absolutely insane. But
it is.
Congress.gov is one of the things that we like to pursue here on the program.
Yes.
Because
you get to see what the Congress critters are doing to the tax code. 99.99% of the population has no clue what they're doing, which is why they get away with what they're doing. But you go to congress.gov, you put the words Internal Revenue Code in quotes in the search bar there at the top of the page, hit go. As of the time we're recording this, 316 hits that the search brings back. And that, of course, assumes you've got only legislation in the current Congress. Check there on the left side. You've got those filters applied to it. And one of the things you will find if you do that is S1108, a bill to amend the Internal Revenue Code to repeal the estate and generation skipping transfer taxes and for other purposes. Well, if you want to repeal the estate tax and the generation skipping tax and the capital gains tax and the corporate income tax and the personal income tax and the estate tax and the death tax and all that stuff, just pass the FAIRtax. The FAIRtax gets rid of all that stuff for you.
I don't understand. I mean, I do. I get the entrenched Washington culture that will not let go of this process. And yet at the same time, you might think they would consider, hey, maybe I can do better by not having to do things this way. And that's how I started to think about what you read every week out of congress.gov. That process is insane. But yet that's the way of the world in Washington, D.C. And you think, well, I guess if this is our representatives talking and thinking in their head, they're thinking, well, how am I going to operate? How am I going to get this money from the lobbyists if the income tax is not there? And we had a conversation with a gentleman not too long ago, and he said, "Well, they're still going to be lobbyists. There's not going to."
There will be plenty of other issues on which lobbyists can enlist the aid of the Congress critters.
Not in the tax code, but not in the tax code. Continue.
Yes, indeed. I will. I'm thinking maybe we should change our Hall of Shame to Hall of Craziness. And if we do that, this one definitely should go in there. S1065, a bill to amend the Internal Revenue Code to recognize Indian tribal governments for purposes of determining under the adoption credit whether or not a child has special needs. Now, how can you have a tax code without that?
Well, I mean, first of all,
do I need to read that again, or have you got it?
It's a you drop from one level down to another level of an existing codicil within the tax code that has to do with determining children that have special needs or need, assistance because of special needs. So now you've got if I understand correctly, the tribal Indians are now being pointed in the direction of that earlier line in the tax code that has to do with identifying children with special needs.
I have no idea what this is going on. There's no text in there, but it just all I've got to go by right now is the description to recognize Indian tribal governments for purpose of determining under the adoption credit whether a child has special needs. That one goes in the Hall of Craziness, no doubt about it.
Adoption credit. Yeah. That's. I can't wait to see the description because it's pretty descriptive there in the name of it.
All right, I got one more. This one's fairly mundane by comparison. This is HR 1818 to amend the Internal Revenue Code. Oops, my computer just lost its page. There it is. To amend the Internal Revenue Code to allow qualified distributions from qualified tuition programs for certain aviation maintenance and commercial pilot courses. So again, you can use your money in one way and get a break, and if you use your money in another way, you don't. So the tax code again is picking winners and losers, and that's no good.
Right. We'd love to have a chance to talk to a lobbyist about how that game works. I mean, the intricacies of it. We know that it happens, but
well, I tell you what, we can just get Steve Hayes on the program one day, and he can probably explain it to us in detail. He has spent a lot of time up there, right there in the swamp, dealing with it, and he knows as good as anybody else how this process works.
Yeah, he'll tell us, and then he's got to kill us.
Oh, okay. Well, then maybe that's not such a good idea after all.
We'll get us some Kevlar vests to put on that say FAIRtax.
All right. Well, let's move on here and continue what we were doing last week. Again, we recognize that there are a lot of people who are now becoming aware of the fair tax that weren't maybe had much attention paid to it earlier. And they've got questions, and the fairtax.org website has a very extensive FAQ. And we're cheating. We're going to save you the trouble of going there and digging this out, but you can go read it for yourself if you want to. But we're looking at some of the questions that are answered in that FAQ. And this is one that comes up a lot. We get this one. Are seniors taxed twice on their savings? Once when they saved it, and now again when they spend it. That's the fair tax is double taxation. What say you about that?
Well, it's a revenue neutral proposal. Fair tax is revenue neutral. It's raising no more money than does the current system. The fair tax only changes where the money is raised, not the amount. Additionally, some erroneously believe that people who have invested in Roth IRAs will never pay taxes on this money again. They may not know it, but they are paying corporate income taxes, employer payroll taxes, plus the associated compliance costs that are hidden in the price of every retail purchase that they make. Under the fair tax, these hidden taxes are driven out of retail prices. Under the fair tax, these hidden taxes are driven out of the retail prices, and they can determine the amount of tax they pay through their own lifestyle choices. In other words, I'm going to drink, you're going to drink a gallon less Cheerwine this weekend.
Be tough.
Doubtful, yeah, but I mean, but the trend, you decide what your tax is going to be based on what you decide.
Yep.
You could buy a used clothes, for example, and not pay taxes. You could get a used car, and there's not a tax on it. Used tax because they have already been taxed once when they were new. Senior citizens, like all Americans, do not lose purchasing power, but gain it instead. Moreover, the fair tax preserves the purchasing power of Social Security benefits. Again, I'll say that very slowly. The fair tax preserves the purchasing power of Social Security benefits. Seniors receive a monthly prebate so they don't pay taxes on the purchase of necessities up to the poverty level. That's that amount that we always talk about. Tax investments will get a one-time windfall. Savings invested in any long-term income-generating asset, such as stocks, real estate, or a long-term bond that can't be called, increase substantially in value. Finally, complex estate planning is an artifact of an earlier age because there's no tax on your savings. And like Bob said a minute ago, that inheritance tax, the estate tax, the death tax, however you want to call it, is non-existent. You pass 100% of your whatever's in your bank to whoever you want to have. It may go in a trust. It may go to your family. It may go to a foundation. It's up to you. But the fair tax allows you to save untaxed.
Well, I tell you, that's the one point that I wish people could understand when they're trying to come at you with the fair tax is double taxation on seniors. The current income tax is double taxation. You just don't see it the second time around because all of the embedded costs of the income tax, every time you buy something, whether it's a new Learjet or a bottle of asprin, everything you buy, you are paying the embedded tax costs of every company, everything that had any hand in getting that product to market for you. You know, those people have to pay taxes, which is a cost of doing business, which is rolled into the price of everything you buy. So you are being taxed twice by the income tax system. Again, you just don't see it the second time when you're talking about the embedded cost of the tax system that is, currently right there, 20%, or a little bit more or less in cases, but about 20% of what you pay for anything is these tax costs, the tax liability, and the huge compliance costs that come with the income tax. All those costs of doing business are being passed on to you, and you're paying them a second time when you're buying things under the current system. So this fair tax is double taxation. Well, no more so than the current income tax is.
Right. I mean, and okay, so you're retired. You get a check, a Social Security check every month now.
Mm-hmm.
And there's a line on there that says withdraw income tax on your top line. So it's just like getting a paycheck, but it's money that you supposedly put in to the federal government back a long time ago in after tax dollars.
Yeah. Okay.
So I mean, the whole point is that you end up on either side of the equation with something that's already been taxed. Your Social Security benefit is now taxed. Everybody that gets Social Security just got a cost of living increase because of inflation here not too long ago, right?
Mm-hmm.
So I mean, so that's a benefit, but at the same time, you're now going to get taxed on that at a little higher. I mean, you're more a same percentage maybe, but the amount of money that is coming out of that increase is still a tax that is still applied to your senior citizen Social Security check.
Yeah, that goes away with the fair tax. Let me ask you another question. What happens to tax-free bonds? I'm an investor. I've got lots of these tax-free bonds. The fair tax is going to screw that all up. What do you think about that?
Yeah, no, they are now directly competitive with corporate bonds. Fair tax can make that happen. Under the fair tax, equities, treasuries, bonds, and other investments are all tax-free. There's a one-time windfall in non-callable instruments such as corporate bonds. This windfall also has a positive effect on callable instruments with some time remaining to the call date, including treasuries.
Mm-hmm. Okay, so that's it. Everything becomes a tax-free bond. That works pretty well. You don't pay taxes on any investment income, be it bonds or stocks or real estates or precious metals or anything else. You don't pay any tax on the appreciation of capital assets until you sell the asset and spend the money at retail.
That's right. You could sell the asset and keep the money and not spend it and not pay tax on it.
You can sell the asset, go back to school with it. You can sell the asset, give it to your kids. You can do anything with that money other than make a retail purchase, and it's tax-free.
Yeah, isn't that amazing? Just amazing. Because we're switching gears. We're not taxing income anymore. We're not having to look at every piece of paper that flies in that represents income and expenses and things like that, because the fair tax is a tax on consumption that replaces the income tax. So all of that paperwork and all of the tax on this and Form 62.7 and all that goes away. I'm hoping there's not a Form 62.7, but maybe there is. Anyway, it's a boom to the economy. It's a boom to your wallet immediately. It happens just like that.
All right, well, let me ask you something else. That we're talking about the fair tax is going to be a retail consumption tax, which means you're going to turn all of these retailers. You're going to turn Walmart. You're going to turn Costco. You're going to turn all of the entire retail industry into a tax collection agency. Isn't that going to burden the retail industry? Is the fair tax going to be a tremendous weight on the retail industry?
I'm glad you asked that question, Bob, because I have the answer right here from fairtax.org/FAQ.
Let's hear it.
All businesses are tax collectors. And for those of you that are joining at home, the businesses today withhold income and payroll taxes from their employees. The vast majority of retail business operating in the states with a sales tax 45 states currently use the sales tax, are already sales tax collectors. They take the money at the register, they split it out, they send a check to the state that they are operating in. Under the FAIRtax, retailers are paid a fee equal to 1/4% of federal sales tax they collect and remit.
Now that doesn't sound like much, but wouldn't you love to put in your wallet 1/4% of everything Walmart sells in a day?
Yeah, it's going to be a boom. I mean, and again, it goes back to benefit, but at the same time, there's time that the retail establishment has to take to process to do this. So they should get, and they rightfully would need to cover the expenses of doing that for the federal government. And I think it's a great opportunity to point out that the fair tax is truly fair to everybody, not just from the standpoint of you're paying at the register, you get to choose how much tax you pay based on your spending habits. But here's the business that's actually going to be doing the collecting and the processing and the sending of the federal sales tax to the state. The state then operates as the go-between between the transfer of the money that's collected at the state level comes from the state to the federal government without millions of businesses across the country interacting with the federal government. It all ends up being a state process, which is already in place for certain taxes, followed by the single transfer from 52 states and maybe the other like Puerto Rico and so on. That money goes to the federal government, and that's it. And there's 52 states that do that, not millions of businesses. So it's an efficient way of doing the transfer. So is the retail industry coming out in a bad way? No, I don't think so. Guess what else is going to happen? They're going to be the ones, all retail businesses like that, they're going to be the ones to benefit from a supercharged economy where folks are going to have more money in their pocket to spend if they so desire. And then
the retail industry will be relieved of the burden of having to file income tax returns. So the stuff that they are asked to do is a whole lot less than what they're no longer going to have to do when you get rid of the income tax and replace it with a fair tax. All right, let's scoot on to another one. I've heard this one before. People that they just declare themselves experts and they'll just make a statement, especially if it's on social media or someplace or even in the regular media, and they'll just make a statement and nobody will call them on it. Hey, the fair tax is going to have this fair tax at 23% is going to be nowhere near enough. You're going to have a much higher rate on the fair tax in order to be revenue neutral with the income tax. You want to shoot that one down?
Yes, as a matter of fact, I have the information right here in front of me. The proper tax rate has been carefully worked out. Keep in mind that decades ago, economists were charged with figuring out the best way to do this. So they've refined this. It's been refined and lots of money's been put towards it over the years. It's not a tax scheme crafted by politicians. It is actually meted and put together by people who understand how the economy works. And that's sort of a backhanded slap to Congress people who really have no idea about, how to deal with taxes. The proper than spend the money. The proper tax rate has been carefully worked out. 23% does the job of, number one, raising the same amount of federal funds as are raised by the current system. And that's a requirement. You have to be revenue neutral. You have to bring in the same amount the current tax method of collection brings in. Number two, paying the universal rebate. And number three, paying the collection fees to retailers and state governments. We mentioned that just a moment ago, that 25/100ths% to the retailers. So anyway, you have those three things that are need to be put together. The current system has got to be funded at the same level that is being funded now. You have to pay the universal rebate, which is the prebate up to the poverty level that everybody gets. based on the government's number of what the poverty level amount is, and the collection fees that we just talked about that happens between the retailers and the state governments that are acting as transfer agents for the federal government. Unlike some other proposals, this rate has been independently confirmed by different partisan, nonpartisan institutions across the country. Detailed calculations are available on the website at FAIRtax.com.
So it basically boils down to who you're going to believe: a self-proclaimed expert who's just pulling a number off the top of his head, or the economist who designed the thing and spent $20 million in the mid-90s, which no telling how much that would be in today's dollars. But the folks that actually spent the money, did the research, and came up with a number says 23% works, and a lot of others don't. Okay, I got time for one more for you.
The other thing I'll bring up right there, but you made a good point. $20 million in the 90s, almost 30 years ago in some cases, depending on which side of the 90s you're talking about.
Mm-hmm.
It still works today. If you look at the calculations and how it gets put together based on current things that happen in the economy, it still works today. It's something that has basically been tested in an incubator for 30 years.
All right, one more real quick here before we have to go. Why even bother with this rebate thing? Wouldn't it be easier and simpler and more fair just to exempt food and medicine from the tax?
Well, then again, you're going to end up finding loopholes and adding details to how that,
that sounds like that would be neither fair nor simple to try to do this exemption way.
But you're cracking open the possibility of somebody else walking in the next day and say, well, I've got this cow out back here, and I only get to milk it on Thursdays and Fridays, so I need to get some kind of exemption. The prebate is the most equitable and most efficient way to make the fair tax progressive. If the fair tax were to exempt necessities, the tax rate would have to be 20% higher than the current tax rate for the fair tax with a prebate.
There you go. The fair tax rate was calculated on it applying to all retail sales, goods and services. And if you start making exemptions, you really get into a really slippery slope and a really messy business of trying to determine who gets an exemption and who doesn't. And if you start giving out exemptions, then you've got to raise the rate on everything else. So it's just a whole lot easier just to tell the Social Security Administration how many people are in your household. Okay, now we know what the poverty level for your household size is. We're going to send you a check to cover your fair tax on whatever you decide is the most important for you to do based on your spending priority. And so there we go. Well, that's our little dive into the FAQ at fairtax.org. As I say, there's a lot more there that we didn't have time to get into. And if you've got questions or comments about our questions largely about the fair tax, and you want to learn about it, you want to educate yourself on what it is, how it works, how it affects things, then I would strongly steer you to fairtax.org FAQ and just read through the thing, and you'll get it all figured out. So I tell you what, okay, I'll repeat something you said last week. If anybody wants to go to congress.gov and come up with what they think is their favorite little piece of tweakery that the Congress critters are doing to the tax code, write us at thefairtaxguys.com. Let us know what that is, and we'll certainly give note and mention to folks who bring specific proposals to our attention that they think are particularly worthy of being exposed to the nation and showing the world what the Congress critters are doing to the tax code. But until then, that's about all the time we have for this edition of Fair Tax Power Radio. Thank you again so much for watching, listening, and sharing. Hope to see you back here next week. Until then, I'm Bob Paxton.
I'm Bob Scarborough.
We are the Fair Tax Guys, reminding you the fair tax is the only truly fair tax, and once you understand it,
you'll demand it.
So tell me, how could I pay less taxes?
Less?
Yeah, I'm trying to get ahead, so how can I pay less?
Well, I suppose you could pay less taxes by earning less money, or you could give to charity.
How is that going to help?
Actually, I'm not supposed to tell you this, but if you know the right people, okay, or if you have a really good lawyer, you can usually get around the big ones.
If I may, Under the fair tax, to pay less taxes, you would simply consume less. You would control how much you pay and when you pay your taxes simply by choosing what you purchase and when you purchase something.
So I could stay